Today we're going to tackle a topic that is really not well known in the awards and wrecking industry, but is one that you need to master and be able to explain to your clients, and that is the tax advantages for awards and recognition programs. So I would encourage you at the end of this presentation to make sure you print the presentation. It is very short. I believe it's only 10 slides. Put these slides in your binder, and when the next time you're making a sales call for awards and recognition program, trust me, you'll be the smartest person in the room and probably the most loved when you can show a CFO, when you can show an HR director, when you can show a CEO how up to $1,600 of their award cost per employee can be deducted directly from their corporate tax return. And the first argument is, why would you choose an award over a cash gift? Well, plain and simple, cash gifts have to be taxed. They have to be called taxable income, and the employee is going to pay tax on it. And in some cases, the employer has to take a withholdings tax from them. So, give a gift card, you're going to be paying tax on it. Give somebody a trip, send them away for a weekend, tickets to a sporting event, stocks, bonds, you're going to be paying tax on it. Even if you're offered a raise and you deny it, you may still have to pay taxes on it. So again, award and recognition products do not fall under taxable income. Gift cards and other forms of compensation are clearly considered taxable income by the Internal Revenue Service. So imagine that. Here's your gift card. Thanks for doing a great job. Oh, by the way, that's not a $100 gift card. That's a $70 gift card. Doesn't really go over all that well. Here are some requirements for an award to be tax-free. It has to be tangible personal property, given for a safety, service, or productivity achievement plan or award, cannot be disguised as payment, has to be part of a meaningful presentation, and by that I mean a meaningful awards, a recognized awards program, and you cannot discriminate based upon employees' pay. So from the lowest paid employee to the highest paid employee, all of them must be eligible to participate in this particular awards program. Now here are some requirements for, as I say, to qualify for tax-free status. Safety or service achievement awards cannot be given to managers, administrators, clerical, or other professional employees. Under the service award program, it has to be something that is given at least in the first 5 years of service. And it cannot be the same award that's been given in the prior 4 years. So it has to be a meaningful service award program, i.e. 1 year, 5 years, 10 years, 15 years, in order to qualify as a qualifying service award plan. And safety awards have to be given to fewer than 10% of the eligible employees in a corporation. So therefore, you just can't buy everybody a jacket and say that's a safety award. You actually have to have a qualifying plan that people meet criterion, and then they're given awards. Now, again, I'm not going to read this. This is fairly lengthy and dry, as most IRS language is, but this is the actual site, Chapter 2 of Publication 535 under Business Expenses, that relates to the amount of deductions that can be taken in a given year per employee. The big number here to remember is it's $1,600 for all awards, whether or not they are qualified plan awards. So up to $1,600 per employee for awards given during the course of a year can be deducted directly from the corporate tax return. Under business gifts, you also have deduction levels. They're certainly a lot smaller. It's up to $25 for a business gift. That is the cost of the item only. You cannot wrap in packaging, shipping, engraving, decorating. It's just for the cost of the item. And these cannot be gift cards. They can't be cash. They can't be anything that is, quote, advertising the business. It has to be an actual gift. Now here we go. This kind of breaks down the very dry IRS language that we looked at on one of the prior slides. You can deduct up to $400 per employee per year for an achievement award. Now that $400 limit will increase all the way up to $1,600 when two things: a qualified written rewards program is established by the employer, and the $400 and $1,600 limits cannot be added together. So you're still going to max out at $1,600 per employee per year if you follow the IRS guidelines and have a qualified rewards program in place for your employee staff. So let's kind of look at some math here. And again, this is one of the slides that I would strongly encourage you to print and take with you and be able to explain to that HR director, that CFO, that CEO, as you sit and determine, is it of value for me to give awards to my employees? Not only is it of value, but literally this slide is going to show you how you can deduct the entire cost directly from your corporate tax return. So in this example, we have 10 employees who are going to receive awards. They're receiving awards under what is considered a well-established and written plan, and that's IRS language. So one person is going to get a $1,600 award, 5 are getting $200 awards, and 4 are getting $350 awards. So taken together, that is a $4,000 total expenditure. If we divide 4,000 by 10, we are at $400 average per each employee. And if the award meets the award requirements, and that is the requirements for a well-written and maintained awards program recognizable by the IRS, the entire $4,000 is deductible. So when the argument becomes, well, $4,000 is a lot for us to spend, you can literally say, well, you're spending nothing. You're going to deduct that entire $4,000 off of your corporate tax return. So again, I would strongly encourage you. This is a short presentation, but probably one of the more powerful ones in our series because it speaks to languages that businesses clearly understand and frankly a part of the tax code that I would dare say many CFOs are not even familiar with. So plan on being a hero. Plan on walking out with some very, very, very enlightened clients when you take them through this presentation and show them not only can they reward their employees, which they should be doing, but they have a great tax advantage if they'll just put a little bit of thought into planning those awards. They'll have a tremendous tax advantage. And again, here we are with our work sites. Just a few, but the code site that we gave you is drawn directly from publication 535 of the 2011 IRS manual. So again, you'll be able to take that specifically to your client and say, you don't have to believe me, here are the words directly from the IRS. So good luck, good selling, and enlighten some people today about the benefits, the tax benefits of selling award and recognition programs.